3 states of the market and when not to take a trade in under 3 minutes. Today, the market is live right now. It's 2:15 Eastern Time. The New York Stock Exchange has about almost 2 hours left in the day. And as you can see, for the past 4 hours, price has just been consolidating in this range, 1.5 point range. This is a good time to sit on your hands and not trade. They call this sideways movement a chop, accumulation, a range. All this is the big boys, the buyers and the sellers have decided this level, this price range is at equilibrium. Both buyers and sellers are satisfied at this point. All of these orders that are inside this 4-hour window are basically sucker bets. There's suckers who have placed bets that it's going to go long or that it's going to go short. Nobody knows which direction it's going to go. So the big boys will take all these bets, and this is liquidity. This is going to be the rocket fuel for the big boys to slingshot in one direction or another. This is the time when the average person should not trade. Sit on their hands, go do something else, go live life. If you're an experienced trader, there's a playbook for this. They call it a range-bound playbook. The market is in a range, and you can take shorts from the top of the range and longs from the bottom of the range. In a 1.5 point range, you could still make some pretty good profits. You just have to have the playbook for a range-bound day. It's not easy, so it's not recommended for a newer trader. You should just stick to looking for trend days. Days when price is moving clearly in one direction. So today, you see the big boys are just accumulating orders. Again, this is going to be the liquidity. This is going to be the rocket fuel for once the big boys decide on making a move. Tomorrow, the Supreme Court is going to reconvene and possibly give a verdict on the